You can just start it whenever. Yeah, I can go in and crop out or edit whatever we need edited out if we make mistakes or if there's a part that we don't want in there, anything like that.
Sounds good.
Not a problem. Got it. Meeting is being recorded. Okay, and then we have to actually start like it's a video, which is the hardest part of making videos, is actually starting, because now that it's recording, you feel weird.
Exactly.
Okay, hang on, let me pull up my notes just so I've got everything here, and then I'll just be natural. It's actually stupid. I hate making videos, and I feel like I'm terrible at it, but if you don't do it,
I need to do that. That's one of my goals, is to do it on a more regular basis. But my son's like, he goes, critique me. He goes, Mom, look at the camera.
yeah.
You know?
I have Julianne hold the camera or stand behind the tripod and like remind me what to say. And then I just talk to her, because if she's right behind the camera, it makes it a lot simpler to talk to her. Okay, oops. All right, I think we are ready. Okay. Let me figure out what I'm trying to say. Okay. All right. Hey, everybody. Hope you are doing well. If it's your first time here and you want to know everything there is to know about living in the Albuquerque metro area, please like, subscribe, hit that notification bell. We'll get a new video out to you every week. That's the goal anyways. So today we are doing a new segment that I haven't named yet, but we're going to start interviewing with professionals and business owners to get you guys some really good information. So you have some knowledge to make educated decisions when buying real estate. That's one of probably the most important things when starting the real estate process, is knowing the process and being able to make educated decisions. The professionals you work with don't make the decisions for you, so you need to know what you're doing and what's going on throughout the process. So today I'm with Christine Turpen with Waterstone Mortgage. She is the best mortgage banker, right? Banker there is. So we're gonna let Christine talk a little bit. Christine, let's start out with the most basic thing. So what is a mortgage and why do we need one?
Okay. Well, a mortgage is a loan to purchase a house. And you need one because most people don't have that much money in the bank. So you have to have a mortgage to buy a house. Now, what the component of a mortgage loan is, and the payment is each month is divided, well, a few different components. It's principal. That is beautiful, because when you're paying your principal, you're reducing your loan. And then, of course, that's all the more equity that you have. Interest, homeowners insurance, and property taxes. And if you didn't put 20% down, you have what we call mortgage insurance. Now, mortgage insurance is a policy you pay. If you default, the lender gets paid on it. Doesn't do you any good, but it will come off on a conventional loan once you have 20% equity. So every month when you make that mortgage payment, the portion of it that's insurance and the portion of it that's taxes goes into an escrow account. I think the easiest way to think about it is it's a savings account, so that when the bill comes due for your insurance once a year, it will get paid out of that. When your taxes come due twice a year, it's going to get paid out of that account. So your monthly payment each month handles all the bills related to your house, as far as that's concerned, not, cable or water or sewer or any of that good stuff. But it is a comprehensive payment that handles the principal and interest, homeowners insurance, property taxes, and mortgage insurance.
Awesome. Yeah. So that's a great breakdown, and definitely get people started on the process. I get calls actually all the time where people don't even know where to start. A realtor or a lender is where you need to start. You need a good realtor and a good lender. It's never too early. I'm always trying to tell people this. They're always saying, well, I'm 6 months, I'm a year out from buying. it's never too early to start the discussion with the lender. I send people to Christine all the time so they know, where to go. If, maybe you're not quite ready to buy, but putting your money into paying down certain things may not be as beneficial. So you want to make sure you leverage whatever money you have to fix your credit or to pay off debts in the correct way. So you're not wasting time and wasting money so you can get into a house. Which kind of brings us to our next thing, getting into a house right now in this market. We're all hearing on the news, oh my gosh, everything is going to fall apart. It's 2008 again, or 2007 again. It's not true. It's not 2007. We'll do a video on that coming up, why it's not that. But so, Christine, why don't you go into a little bit on what mortgages look like right now, what interest rates are like, we'll start with the problem. What's our problem right now?
Well, they call it a problem because we've been spoiled rotten. Okay, so interest rates are higher than they have been as of late. Okay, so we were spoiled a couple of years ago. I mean, we were down to the threes, unheard of. I mean, what's average is 5%. Okay,
yeah,
the first time buyer program right now is 6%. It's not that high, right? Yeah. Okay, and then on just a regular loan that's maybe not a first time buyer, we can be up to the 7. So yeah, that's what that's the difference right now. And so it's really more than anything that we're spoiled rotten. During like the interest rates were up to 17%. Okay, we're nowhere that. It's just that we came off being spoiled rotten. And so yes, rates are higher than what we had seen the last few years. Now we do have a saying in my industry right now. We think it's cute, but you too. But we're saying you're going to marry the house and you're going to date the rate. The reason we're saying you're going to date the rate is we don't anticipate that you're going to be in the loan that we give you probably no more than a year. Okay, and the reason for that is we are in a recession. Okay, and when we hit a recession, 100% of the time, interest rates go down. So we are anticipating that by the end of, everybody's got a different time frame. We pretty much know it ain't going to happen the first quarter to half a year next year. Anytime after that, we do anticipate rates are going to go down and we're going to refi you out of that loan. So my thing is you've got a house and, everything is telling us that houses are going to still appreciate next year. Last year, houses appreciated 10%. We are anticipating a single-digit appreciation. But the nice thing is you got in before house prices got any higher. We're going to get you into a payment that you can afford, and it's going to become even more affordable. So we can get you into even more.
Yep. And I've been telling people on my side of things, right now, you're going to have less competition. It's going to be easier to negotiate. Depending on the price of the house, everything is different. So run comps, make sure you know what the house is worth before writing an offer. But on repairs, you're going to see a little longer market time. You're not going to have to make you can wait the evening. You used to be able to, a few years ago, you could go look at a house and sleep on it, see if that's the house you want to buy. On average, the last 2 years, I make the joke, people have been take longer to shop for pants than they do shopping for a house. On average, I think I spent about 15 minutes in a house and last year you had to make that decision before we left that house. Otherwise, someone else is snatching it up. So people were buying out of desperation because they needed something and they were just buying because that was it. So you're going to have a little bit more time to shop, a little bit more opportunity and options out there. And as the builders have slowed down dramatically again. So as soon as you hit as soon as those rates start dropping down again, everyone that's waiting is also going to hit the market. Prices are going to skyrocket again. There's going to be no competition. And then we're going to be back to the days of, no repairs or no asking questions, all that fun stuff. We're going to be back to the days of having, no repairs, not able to ask for anything to be fixed. You're buying as is. Paying seller closing costs. It's a great time to jump in to avoid that. You're going to end up paying the same amount with a lower rate because you're going to get a more expensive house.
Yep. And we're hearing the exact same thing. Okay.
Yep.
Then we get to that place where rates come back down again. It's going to be it's going to be another.
Yeah. Yeah. So we talked about some problems. I'm assuming you have some solutions to those problems. How we can, some ways we can get people into homes with what's affordable. Remember, you live in the monthly when you're buying a home, so that's what we're going to focus on, making sure you're comfortable with that monthly payment and not having to stretch yourself too thin. It's great to have a nice house, but if you can't go on vacation, you're eating beans and ramen every night. That's no fun either. So what are some of those solutions? What are some things that we can look for when getting a mortgage?
Okay, well, first of all, I want to explain the first time buyer program, because the beautiful thing is we can get you in with minimum down, okay, or minimum money into it. What we do is we give a second mortgage of 4% of the sales price. It goes into a second mortgage, and that's what we cover, the down payment and the majority of the closing costs with. And the program itself doesn't require any money. Right now, unless we can get money from the seller, somebody's gonna have to come in with some money, but it's minimal. So what I love about it is that we ideally leave guys with some money in the bank, to kind of buffer a little bit the difference between a house payment and a rental payment. But we also have a deal called 2-1 buy down. Now, I feel like this is a little confusing, so please, if I don't explain it so that it's elementary, please just, have me clarify. So what 2-1 buy down is, let's just say the interest rate today is 6%.
Okay.
And the seller is motivated, and I have seen this is happening, you guys, houses that are sitting a little bit, the seller's ready to give money. So what they do is they give us the money to make your interest rate the first year in it, let's call it 4%. Okay, so you're paying a payment based off a 4% interest rate. The second year would be 5%. And then the third year on, you'd live with 6%. If we're not going to go ahead and refinance you out. Now, how that money comes from the seller is, we calculate what the difference between a 6% interest rate and a 4% interest rate. And then we collect that money from the seller. And the same thing for that 5 year. We figure out what a payment is on a 5% versus a 6%. And then we collect that money from the seller. The cool thing is too, is if we're going to end up refining you out of the deal before you hit like that third year, you're going to have money left over in that account, and we can put that towards the refinance. Does that make sense?
Yeah. So basically, they're going to have a savings account set up, and they're going to pull that. So you're still going to have whatever the higher rate would be. The seller's just covering that little bit for you the bank is going to cover that for you out of an account they set up with the seller's money. And the nice thing on my end, on the real estate end on that, you can use it for negotiation, because if they're doing, if they're going to look at a 10% price drop where you're going to offer a lower price, you may be able to have, may only be 3% for the seller to pay that interest rate drop. So it can be a win-win where, the seller is going to make a little more on the back end of their property instead of doing that 10-15% price drop and only doing a 3, but you're going to save significantly. And remember, again, we look at where you live in the monthly. So, and when you're talking about hundreds of thousands of dollars, when you're making an offer, a couple $1,000s is nickel and diamond at that point. So if you can get the seller to pay that, it's going to drop your payments significantly more than if you drop that purchase price 10%, because you're looking at a few thousand versus 10,000. To drop your interest rate is going to be way more beneficial for you as the buyer and the homeowner than it is going to be just dropping it that little bit extra. So it's I think the best win-win that I've seen right now, and it's a good negotiation technique. Plus, if you are right on the cusp, if it's worth that much, the house is worth what they're asking, you can always up that price, because we're still seeing appraisals coming up because that's what the market was doing. So your appraisal's more than likely going to come in all right. And you can use that on the back end to drop that monthly payment enough to make it affordable, make it comfortable for you, and then refinance. It's going to come down. It's just a matter of, when.
Yeah. Josh, and one thing I want to add, I think there's a thumb rule that kind of helps, bring home your point. if for every $1,000 that say that seller would reduce the sales price, that only changes it $7 per month. So
Yeah.
you get a lot more bang for your buck doing it the 2-1 buy down than you do if you just take a price reduction.
Yeah, excellent. That's a great said. I can cut this part out because I'm trying to think of what we're gonna.
Well, we also talked about kind of just the difference between renting and buying.
Yeah. So let's talk about, because a lot of people are waiting. So I know a lot of people are stuck in rentals. Let's talk about rent versus buy. I did read an article the other day that was basically, don't buy real estate. It's a terrible investment, which is stupid. It's the best investment. It's, it constantly going up. It is, what's it called that we're dealing with right now? Where money is worth less.
Oh,
I don't know. It's a great investment. I'll cut some of this part out because it's terrible. Let's try that again. I'm going to do this so I know where to cut it. So let's talk about rent versus buying. I know a lot of people are either stuck in rentals, or I've been hearing a lot that renting is just more worth it, or buying is not worth it at all, which is terrible financial advice. Putting your money in real estate, you're always going to have a higher net worth than not. And so let's talk about renting versus buying, what your payment's going to be, with the differences there.
Okay, and I'm just going to add a little personal note on this. I personally own 3 rentals. All now free and clear. Okay, I have lost truly. I have lost money in the market. Okay, personally, my safety net is my real estate, and
Yeah.
again, there's no better. And especially now, I'm making more and more money because of the rent. So
Yep.
all I say is, I am truly personally a believer and live it.
Yeah.
And happy that I got there.
Every millionaire makes the vast majority of their money not in business, but in real estate investment.
You sure do. You are so right. So first of all, the prediction for rents for this year is that they're going to go up another 8%. Okay. I think the big thing is that when you're renting, you have no control. When your lease is up, you don't know if your landlord's going to raise it $100, double it, or what. And I'm not kidding you. I have a friend who's living with 2 roommates. The landlord doubled their rent. My girlfriend is sleeping on a couch because she cannot afford to get into another one. So don't know there. But,
or they sell it out from under you. I get calls all the time. Hey, my landlord's selling the house. We're month to month. He gave me, 2 months to get out. And that's, you never know. It's just whenever your lease is up or whenever he decides or they decide, we're selling the house now, get out. And they can legally do that, especially if you're month to month. They have to give you 30 days notice, and they can start the selling process while you live in the house. There, you do have seller rights. We'll get into renters' rights and stuff on a different video. But yes, they can just sell the house and say, please get out and find somewhere else to live, which puts you in a tight crunch because everything in real estate is 30, 45 days out.
You got it. And so, rents are just going up and up and up, and the prediction is they're going to keep going up. Okay.
Yep.
So what I did is, first thing the thing to consider is that a mortgage payment stays consistent. Okay. We went over the items that are in there. The interest rate, of course, can never change. We're going to be putting you normally in a fixed rate. Okay. There's adjustable rates. We're not going to talk about those. But if you're in a fixed rate mortgage, the only thing that can go up is taxes and insurance. Okay. Taxes, there is a law in this state called tax lightning. They are not allowed to raise your property taxes by more than 3% after the initial one, that just gets you to the value. After that, it can never go up more than 3%. Insurance, the insurance carriers cannot raise your rates until they've gone through the insurance commission to approve it. But I will guarantee you the insurance commission is not going to allow them doing anything crazy. Okay.
Yeah.
So You're going to, the beautiful thing with your mortgage is your mortgage payment is going to stay consistent. If you have no surprises, you're in control, versus, renting. Now, what I did is just to kind of prove the difference of what would happen. I took a $400,000 house. I even did an interest rate of 7%, which is a little bit high right now, even. Okay. And I thought, and I pulled it out to what does it look like year 9 of you buying that house versus renting. Now, in the first, year or so, the rent was actually $300 higher than, the mortgage payment was actually $300 higher than the rental payment. But see how this all plays out. Okay. In 9 years, you have 2 things that have happened. The house appreciated. Okay. And 9 years is a decent amount of time. And, again, we have experienced appreciation, the majority of those years. The other thing is that part of your payment has been going to pay your principal balance down on your mortgage. So that means that all the more equity you have in there. The numbers work out that after 9 years, you actually are $254,000 ahead than if you rented.
And when you purchase, you're $250,000 more ahead. And like we love to say, when you are renting, interest rates are a little higher right now. 7% hurts, but renting is 100% interest. After I tell people all the time, once if you buy a house, average is 5 to 7 years. Somebody's in a house before they sell, refinance, or move on. You sell it, you're gonna make money. I've never sold a house, after someone's lived it in 5 to 7 years, where they take a loss or break even on the house. Even with people, it took them a little longer, but even people that bought right before the crash are now making money on their house the last 5 to 7 years ago. But when you rent, you're going to get a bill for $1,000. They're going to take your deposit. They're going to take your last month's rent, whatever you put down, and then they're going to send you a cleaning bill for $600-700 on top of the $2,000 they already took from you up front. You're always going to lose money on a rental. And if you're worried about, I don't like to fix things, set up a savings account. I always tell all my people, set up a home savings account, keep $2-3,000 in there, don't touch it. You're not, and then if something breaks, you don't have to worry about it. You pay someone to fix it. I don't fix things in my house. I pay someone to fix them. I don't like, that's why I sell real estate. I don't like to climb on the roof. But I think that was great. I think we got a lot of good information in there. Was there anything else that you wanted to add on?
No, the only thing is, do you want me to redo that part where I flip the buying versus the the rental, or do you feel like your correction was good enough?
Yeah.
Okay.
Yeah, no, I think it was fine because it's I think making those little mistakes and stutters and stuff here and there makes it feel more natural for people. So, and I can kind of fix stuff, but cool. So we'll just do the outro and I'll let you get back to work. Awesome. Well, that was some great information. I hope you guys learned a lot. If you have any further questions or you want to talk to either of us, Christine's information is in the description down below. You can get a link right to her website, contact her through there. All my information, you can set appointments on my website directly. So if you have, we'd love to talk to you. We'd love to answer all of your questions on real estate. And I think that's it for today. We'll see you guys next week. Thank you very much for hanging out with us today. Christine, this is not the last. We will see you hopefully, and we'll get some more really good information from you later. Thanks, Christine.